What's going on, motherfuckers? Another update video. Not really the day we were looking for with AMC today. Red today, not really a big deal. Changes absolutely nothing. As a matter of fact, it puts us further ahead in the micro tracking, so it is a good thing. SPY did its thing today. Said yesterday SPY would be touching the 420s today. SPY's high of day 423.50. Looks great, and that's it. So I'm just going to jump into the video, and we'll start with SPY's macro. Once again, this is the side-by-side from SPY's all-time highs, the downtrend, descending broadening wedge to this point, the bottom, versus the 460 rejection, the downtrend to this point, the bottom here. In my video last Friday, I said that this was the bottom for SPY at 409, expect upside all this week, and that's what we've seen. From 409, the bottom last Friday, SPY has seen nothing but upside here, just climbing up. High of day today, 423.50, reclaimed the horizontal trend. This looks great. As far as the tracking goes here, so when you break back above the horizontal trend right here, you reject this green horizontal line here, come back and break slightly below the horizontal trend, once again in white, reclaim it a little bit higher, and then you pull back and bounce perfectly off of it. Over here, there's your bottom. Reclaim the trend, touch this green horizontal line, broke slightly below the white horizontal line, and then slightly above the green horizontal line here. Potentially expecting a pullback for SPY tomorrow, which really isn't a big deal. We're still going to continue to the upside, but it looks like tomorrow's day might just be a very slow, choppy downtrend back to 419. This white horizontal trend here, 419. So coming down tomorrow, potentially you start the uptrend off. This uptrend will be taking us to the high 420s, 425 to 428-ish, which likely would start on Friday. Maybe potentially if we touch 419 early on tomorrow, this climb will start tomorrow as well. But this looks great. Bottoms in on SPY, checking off the final symmetrical landmark to the downside, the 410, which we did last Friday, and now we're just going to be climbing to the upside, short to medium term, looking for 450, and then potentially one final pullback to 420 before all-time highs. So this looks great. Jumping into AMC, red today, not a big deal, changes absolutely nothing. So looking at the flat portion of the 2021 cycle on the left versus the current, knifing down to your third bottom all-time low from the third peak of the tri-peak, knifing down to your third bottom all-time low from the third peak of the tri-peak. The uptrend from there, the rejection, the pullback chop zone, and then January 15th is the end of the macro. Here's your third bottom all-time low, the uptrend off, rejection, pullback, chop zone, and now we are in the process of playing out the January 15th candle. I mentioned multiple times over the course of the last 2 weeks that this January 15th daily candle would take all of this week and likely half of next week to finish playing out. And that candle would likely finish playing out on Wednesday, intraday, which leads us into Wednesday after hours earnings, which is 1-to-1. Again, 342 days on the left in the 2021 cycle from the beginning of the flat portion until your peak. On the right, from the beginning of it until where we are today, 335 days. You're now 7 days away from being 1-to-1 with the flat portion. Again, with that 7th day landing on November 8th, Wednesday earnings next week. So this looks great. Like I said, we're going to be playing out this January 15th candle all of this week and half of next week into earnings. And that's the end of the macro. January 15th daily candle here is the end of the macro. This gap up is your macro break, and then just a straight line to our squeeze from there. Moving on to the same thing, flat portion now with the EMAs. So I'm just showing the EMAs here. They're absolutely perfect. We'll start with the 20 and the 50. So the 20 is in the red, the 50 is in the orange. I know there's a lot going on here, but the 20 starts under the 50. You get that double cross move in the double peak move, which then you break below the 50, poke above twice in the tri-peak, and then knife one final time where you meet the price action at the chop zone. Current cycle, same story. 20s under the 50, double cross move here in the double peak move, break below, 2 pokes above in the tri-peak, and then you break below one final time where you meet the price action at the chop zone. So you can see like the EMAs here are lined up perfectly compared to the previous flat portion. It looks amazing. The 100 is in the blue here, just runs right across the double peak move, right across the double peak move right here. and then right across the tri-peak. So there's your first peak right here, crosses right through that, and then right through your second and third. Again, that's where you're knifing down to your third bottom all-time low, right there, knifing off the 100 EMA, and over here knifing off the 100 EMA. The 200 EMA in yellow has a few touches, and the double peak move, you cross through that, as you see right here. This is the double peak move right here crossing through, and then you touch right at the second peak of the tri-peak, which is the highest peak, which we did right here. The second peak of the tri-peak, crossed right through that, and that's it. The next time we cross the 200 EMA, we'll already be squeezing. The next time we cross the 50, the 100 EMA, we'll already be squeezing. And that is pretty much it. Once again, we're 7 trading days, not trading days, 7 days, 7 days away from being 1-to-1, with that 7th day landing on November 8th, earnings next Wednesday, which looks great. Again, both peaks of AMC, January and June, did end up landing on a Wednesday. Not sure how significant that is, but you know, it's food for thought. So it's that. Now getting into the flat portion zoomed in. So looking at the 2021 third bottom all-time low versus the current cycle third bottom all-time low. Again, back to this old chart. I don't know why that happens every time. So the cup out, the green circle, the cup out, the green circle, break back below that horizontal line on both sides, chopping, reclaim the yellow, reclaiming the yellow, the rest of the upside to the top, the rest of the upside to the top, that's where you reject, down to your chop zone, double top, double bottom, double top, double bottom. 1070 landmark here. Again, we didn't quite get the wick. The body ends here, very dramatic wick here. Didn't end up getting that. This whole time, you're fighting for the 20 EMA on the daily. I've shown that multiple times. Coming down from that 1070 landmark, ascending lows, and then you get into the January 15th candle. Right now, I would have to say we are in this candle right here, this red doji-like candle. Again, we didn't get the full wick up. Theoretically, this wick should have taken us above this horizontal line in white. It didn't end up happening. I looked at this on the 1-minute chart. This wick is 20 minutes of price action. Again, you know, we didn't get the wick of this move, just like we didn't get the 1070 wick. We didn't get the full wick up on this, which is completely fine. You know, fractals, they're never going to repeat perfectly, especially on a micro level. And one of the main reasons is because of macro trends, macro trend lines, resistances. This is a rejection off of a very macro resistance and a very important trend line, which I'll get into in a minute. But I would have to say that we are in this doji candle right here. And more than likely tomorrow, we're going to be sideways, finishing up this doji candle. I'll get into that. And then Friday, potentially, this is the move we're looking for, which theoretically would be completing the macro, the V, to the upside. But then next week, we still have to come down, knife from this, and then form the micro V. And that's it. We are in the middle of this candle right here, right now. So this looks great. Moving on from that. So here is zoomed in on the 1-minute now. So this is January 15th. So right, that last chart, we're looking at this move here. This is what we're tracking. This is where we are right now, the January 15th move. We're looking at this wick right here. Again, we're looking at this wick right here and then the candle right next to it, the doji, which is where we are. So zooming in on that, here's the January 15th, 2021 on the left, and the tracking on the right. This is where we are. Again, the top of this move here is the wick of that candle. It was 20 minutes. This is 1-minute candles from which you pull back and you form a W. And today, that's what we did. We pulled back and now we are starting to form the W here. Expecting tomorrow is going to be pretty choppy and just a very boring sideways day once again. So we find a bounce tomorrow morning, more than likely, back up to 1060, 1070, where we reject, and then come back down and double bottom this, more than likely slightly higher than we saw today. Heading into Friday, this would be Friday's price action here, the rest of the uptrend up. Do we get the full thing? Maybe, who knows? Could just get the first part, and then Monday finish it off, and then reject pretty hard Monday, and then start the knife down. And then Monday, Tuesday, Wednesday, this would be the price action. And then, you know, this would more than likely be Wednesday intraday, the actual knife part of it, heading into earnings after hours, where theoretically we gap up directly into our squeeze. So this looks great. That's pretty much it for that. Here's that macro trend I was just talking about. So What we're doing here is we're running a trend line from the June all-time highs of AMC straight down, where you have your July. This was that 100% after hours gap up in July, which rejects this trend. You come down, and then you have two more rejections perfectly off this trend. So there, one more rejection here, and then another rejection here, and that's where you knife down to your third bottom all-time low. Up here is just zoomed in a little bit, just showing you the rejections. So there was the gap up, and then the two more rejections you get into the knife. The green horizontal line below is just all-time lows on AMC. Just running it straight across. Here's the original flat portion. And naturally, today's rejection rejected right off of that trend, once again. So rejected it, June all-time highs, the July 100% after hours, we rejected it. Then we rejected it two more times coming down from that, once here, and then coming all the way down to your third bottom all-time low, the uptrend off. Today, we rejected right off of that trend once again. Naturally, the resistance of this trend and the support of the all-time low landmark is meeting on Wednesday, November 8th, earnings next week. Naturally, the apex of this triangle would just have to be November 8th earnings next week. This looks great. So that rejection, again today, the rejection we saw today is rejecting a very macro trend of AMC. From the June 2nd all-time highs straight down, that's the trend that we rejected today. Another reason that we didn't quite get the full wick up here is because we rejected that trend. Again, fractals are never gonna repeat perfectly. They will rhyme. I don't know why it keeps changing. It's really pissing me off. They will rhyme. It'll never be perfect. Again, we didn't get the wick of this move, just like we didn't get the 1070 wick because we rejected that resistance today. Again, this wick is 20 minutes of price action, not really a big deal. And now we're in the middle of this doji candle right here. Again, which is this W. This is that doji candle. The pullback, and you just hit sideways W here. That's the doji candle that we're in right now. Again, expecting this tomorrow. So uptrend early on in the day, and then potentially end of day pulling back to double bottom, slightly higher. Friday, boom candles back into the uptrend, potentially finishing off the full move. If we don't, it would be Monday next week early on, probably spiking up at open to the top, and then the rest of Monday would be downside. Tuesday, Wednesday, more downside. V'ing Wednesday intraday, heading into earnings where we squeeze. So that's it. That's it for that. The symmetry now. I've gone over this in all my videos. This is the previous iteration right underneath us from the third bottom all-time low. The rejection here, you pull back, very sideways choppy price action, and the rejection at $11. Pull back, very choppy price action here. The breakout and the retest, the breakout, the retest, and then the move up. So just checking off landmarks here. Here's the horizontal line across, doesn't quite reach the local highs. Same thing over here. Horizontal line across doesn't quite reach the local highs, and then you pull back, very drastic pullback. 880 to roughly 810, so 70 cent pullback here. And then over here, 1080 to $10, so an 80-cent pullback. So almost the same thing here. And then again for this, tomorrow what we're looking for is a pop up back to the middle of the range, 1060, 1070, and then coming back down to double bottom. And this would be Friday, upside. So, either perspective you're looking at, this is pretty much what's going to happen going forward. Now is tomorrow we bounce, don't quite find a new high, reject, pull back, double bottom, and then Friday potentially we see some boom candles to the upside. That's it for that. Here is the W, the financial freedom trend line. This is the final iteration of the flat portion, the W, running it over your first peak of your tri peak, right where you reject at your chop zone here. January 15th breaks you out and retest, and that's it. Gap up there, and that's the end of the macro. And the current, here you go, right over your first peak of your tri peak, straight down to your third bottom all-time low. The uptrend off where you reject, the pullback in the chop zone. Monday broke out, Tuesday followed through with some more upside, and then today, we found a new high today, but then just nothing but red. It looks great. Nothing else to say here. This looks amazing. Just looking at this a little bit more zoomed in now. So we're looking at hourly candles here. So here it is, that same trend line where you reject at your chop zone, pull back, chopping here, fighting for the 20 EMA, reject here, pull back, fighting for the 20 EMA. The breakout and the V of January 15th actually retest this trend line. There is a case and it's not likely, but there is a case that tomorrow we just see more red to come down and test this trend line. That would be the end of the macro. I don't think this is the case, but it is possible where this was the breakout, because that's what this is. It's a breakout, January 15th. It's a break of this trend. The V of January 15th is retesting this trend. It's possible that's what this was. Just coming down to test now. If this was the case, tomorrow expect more red down to roughly 940 and then a V off of that. I don't know really how this would play out. That would have us peaking before earnings, which I don't really like. I like the perspective where we're one-to-one with the flat portion, where it lines up with earnings, and just tracking wise, theoretically, we should find a higher high than the 1118 high, the local high here. So I don't really love this perspective. And again, in this one, here's the breakout move. Again, we didn't get the full wick. That was 20 minutes of price action, just like we didn't get the 1070 wick right here. And then right now, this pullback, we would be right here in this doji candle. Right here. And then tomorrow we would complete the doji candle before Friday. We would get this boom candle here back to the top of January 15th. Potentially all of it, potentially some of it runs into Monday. And then Monday, Tuesday, Wednesday, pulling back the V, and that's it. That's it for that. And here is just the Heikin Ashi flat portion once again. Just showing you the flat portion here, coming down to your first bottom, choppy, gap up. Coming down to your first bottom, choppy, gap up, double peak move to your second bottom, which is a higher low in the daily, and then the tri-peak, and then the knife through the financial freedom trend line on both sides, knifing through it, the uptrend up to it, the pullback chop zone, the uptrend up to it, the pullback chop zone, fighting for the 20 EMA in both, the breakout, and that's it. You break out of this trend, you retest it, and that's your squeeze. That's the rest of the macro here. That's pretty much it for the video. I wouldn't expect anything crazy for tomorrow. Potentially chopping sideways. That scenario where we see more red tomorrow, I wouldn't even be mad if we saw more red tomorrow. More red down to 940. Again, this is unlikely, but I'm just pointing it out. More red tomorrow would just put us even further ahead. It would pretty much put us at the end. I don't really love that scenario. I think tomorrow is just chop, and then Friday is the upside, and then Monday, Tuesday, Wednesday next week is downside to finish off the V and also finish off the macro. It's pretty much it for the video. I didn't update any of the January 15th side-by-side charts yet. I'm probably just going to wait until Friday. I mean, it's Wednesday already. Just wait until Friday's price action finishes up to get the weekly candle in full here, see what happens, see if we touch that $14 range. It's potential. We don't have to come up to 14 exactly. Like I was looking earlier today, anywhere from $12 to $14 to the upside here would finish off the V. It doesn't have to be perfect. It's pretty much the point. So yeah, I'm just gonna wait till Friday before I update this chart and the full one here. Again, we're looking for upside to this yellow horizontal trend, $12 to $14, give or take, which would complete the macro, and then that's it. Next week, earnings, one-to-one with the flat portion. Again, 7 days away. So it's great. So once again, tomorrow for SPY, potentially pulling back to 419. Potentially you start the uptrend from 419. Potentially all day is just the pullback to 419. And AMC more than likely will be chopping sideways, potentially finding a bounce to 1060, 1070 early on, and then coming back down to double bottom, which would be this. So we came down to the trend, so upside off, not quite finding a new high, pullback end of day tomorrow, so uptrend to 10.6, 10.7, that resistance, pull back to the trend, double bottom it, slightly higher. Into Friday, we get the upside, and that's it. Next week is gonna be this pullback, and then earnings, looking for the macro break. So that's it for the video. Did I leave anything out? I don't think so. I think that's it. Catch you guys for an update tomorrow. I really wouldn't expect anything exciting tomorrow. Probably boring price action all around. SPY, chopping, sideways, and then AMC, same story. Friday, however, looks pretty green. Friday for SPY, looking for that high 420s levels, the 425 to 428, and AMC potentially cracking through 1118, the local high, and heading up towards that 12 to 13 landmark to finish up our macro. That's it.